Hello and welcome to another episode of the World Class Real Estate Podcast. My name is Mark and joined by Mr. Ian Macbeth, Macca to his mates. We're now calling him. If you've been listening for an extended period of time, then you will feel like one of his friends. So I think we can get away with it. How are you, mate?
Good. Everyone's my friend. I'm trying to give the information out there open and honestly. So yeah. Although, funny enough, 10 years ago, maybe when I was in a different type of agency world, no one was your friend when you were on the high street kind of battling with everyone competitively. But yeah, it seems like a different world. One of my friends just launched his business in a neighbouring town, kind of quite supportive of that. And is it competition? Sort of, not really, I guess. But, it's just nice to see people doing well in the industry. And it's nice to see people trying to do the industry in a more relevant and modern way, I think. So yeah, everyone's my friends. I'm in a good mood today. I'm feeling good. The sun's gone down a little bit, so it's not quite as hot as it was for the last couple of weeks. So yeah, it's all positive. What about you?
Yeah, all good. We've just been looking at our half year results, changing our plan a little bit in the direction we thought we'd go. Actually, the results have been a little bit different just from one side of the business to another. So a little bit of a deviation there. So I'm about to sit down with the team and run through what that looks like and targets for the rest of the year. And we're going to have a meeting that is mainly about, right, you've got, what are we, probably 2.5 months to make your year now. So a real focus on what can be done to drive sales between now and mid-September. I think mid-September is probably pushing it really, but You've got, if you go on holiday now, when the kids go on holiday in a couple of weeks, then your year's done basically, and that's not the way that we'll be doing things at Movie Works if I can have any influence on it. So excited to sit down and look at those results with the team and share plans for the future. It's really important that we do that. Looking forward to getting today's guest on. I've always had an interest in mortgages and the finance element of the business because that was where I started basically, or started full time anyway. After uni I graduated and then trained as a mortgage advisor and did all of that, and I think the crossover of skills are really good. Because I had an agency experience, I would get involved with the agency and get my own leads as well, and I think hopefully we can drive a little bit of value for agents that will really dovetail really well with Royston's episode last week, because actually, as we are entering a tougher market, depending on your opinion on it, it could be mortgage leads that it doesn't matter any market, does it? It'll improve your profit because for a little bit of an extra conversation, that's all it is, a little bit of extra conversation, a little bit of training, a little bit more effort, you can generate significant sums of money for your business. But not only that, you can actually probably give a better level of service to your clients, which should, I think, be one of the main focuses.
Yeah, and there's quite a few different income streams from a mortgage advisor's eyes as well. So it's not just a case of, first time buyer mortgage. You've got the first time buyer mortgage, but then you've got the multiple remortgages that come with that client. So it's reoccurring. You've got protection, you've got death aspect of protection.
Yeah.
But then you've got incapacity to work protection, different insurances that come with it. So there's quite a lot of different ways that you can earn through financial services. You've got wills, estate planning, there's a lot of different areas that you can go with it, and pensions, etc., if you want to get into the wealth management aspect of things. So it's quite a good avenue to look at from an estate agent's point, because you've got the perfect client for them. Tom's coming on this week, mortgage advisor, and I think it's good that we get a mortgage advisor on, following up from what Royston spoke about. We're going to ask, obviously, Tom some questions around how he sees it, estate agency through the eyes of a mortgage advisor. Probably we'll touch on communication and relationships between the two, but also give us some education into the actual mortgage industry as well, and kind of what is going on at the moment, talking rates, talking how rates are set, what's going on with the base rate. Maybe we'll get him on or off the fence in terms of a bit of forecasting. We see what we can do. But yeah, I'm looking forward to getting Tom Ashton on from Mortgage Tribe. I think he's a really good, knowledgeable broker that's been in the industry for over 15 years. So a good guest. And just touching on your point about the halfway point as well, Not to, I don't think I've mentioned it on here, but I've actually got my own little column that I write for a estate agency today. And the the recent article that just went out last week is all around H1, H2, July the 1st being the trigger point. And for estate agents, it's probably quite an interesting read that listen to this podcast. So yeah, give that article a check out. If you tap in Macbeth into search on estate agency today, you'll come up with straight from the source column, and it's probably a helpful article. Maybe we can touch on that on another episode. But just because you mentioned it, I think estate agents will take quite a lot from that, from a forecasting point of view and sort of planning point of view for the second half of the year.
Good opportunity just to check in against your goals and make sure that everyone's on track. I think it's really easy around this sort of time of year to get in that muddy middle part of, people thinking about holidays. You might have fallen out of good routines that you're setting, all of that sort of stuff. So yeah. I haven't read that. I'll take a read. But should we dive in and get Tom on?
Let's do it. Yeah, I'll introduce him. Tom, welcome to the show. How are you?
Hi guys. Yeah, I'm good. Thanks. Thank you for having me on.
You're very welcome.
No, thank you very much for joining us, Tom. We'll start as we start every episode on this podcast with the same question. It's, what does world-class real estate look like to you?
Yeah, so to me, I actually think it's some of the skills, are very similar to what a good mortgage advisor would have, which is an individual or an organisation where sort of excellent communication is at the heart of what they do. Being able to speak to lots of different types of personalities and clients, and liaising with all different parts of the ecosystem, really, whether that's dealing with mortgage advisors, solicitors, other estate agents, who may be, your rivals or whatever, and having the client outcome at the heart of it. A big word I always use for mortgage advisors, and I'd like to think estate agents have this as well, is empathy and putting yourself in the position that there's actually someone trying to move home here. I think for us anyway, we can find it very easy just to get too bogged down in getting a mortgage application through without actually realizing what the bigger picture is. Whereas there's actually a family or families in a chain trying to move home here. And having recently moved myself, when you haven't done it for a while, you can forget how stressful that process is. So it's actually quite a big wake up call and reminder for me, is like, actually, when it's you at the heart of it, it's real. And I think when the estate agent is remembering that all the time, it really puts the client first. And just when I say communication, I mean, things always go wrong with moving house, and it's, can you communicate in the right way to the client, and can you be a problem solver? So can you deliver bad news, but I've also done a bit of research, or I've done X, Y, and Z, and we're going to do this, going forward. So for me, it's those sort of characteristics that I think would make an individual or an organisation world class to me.
Yeah, there is a lot of crossover. I started after uni actually as a mortgage advisor, and you can see the skills that pass from agency into mortgage advice, because you're doing a very similar job in terms of actually dealing with people when they're at the most stressed. What do you call it, Ian? A shit magnet or a money maker?
Yeah, money maker or a shit magnet in terms of personality types. Yeah.
And that's exactly it. We talked about that exact thing on the podcast a couple of episodes ago, Tom, about how you deliver that sort of bad news and also find a solution to people. So in your role as mortgage advisor, you mentioned communication and empathy, two things that are massive across both roles. How do you think a good mortgage advisor communicates differently? And I think it probably passes over to agency. So what does good communication look like versus bad communication in that sort of role?
I think it's just doing really simple things right, like responding to an email in a good time, picking up the phone when someone calls. The amount of times I get someone who just says to me, just thank you for being there, just thank you for picking up the phone. I just think it's crazy. Or if something's just taking a little bit longer than first planned, just sending a very quick WhatsApp or an email to the client saying, by the way, I haven't forgotten about you. It's just going to take me 24 hours more than I thought, or the lender's just asked me a few more questions. People are so appreciative. Like, thank you so much for telling me, rather than just keeping me in the dark. So I think it's just remembering those little things. And, things always go wrong with a mortgage application, or, a lender might make it more difficult for an applicant. And some people do get declined, and that's just part of the job. And when I first started out, I'd really panic in that. I'd be, oh my God, I've got to deliver some bad news. They're going to be really upset. But hang on, before I pick up the phone, let me almost start a new application. Like, by the way, let's say, for example, Santander have unfortunately declined your application, but I've made a few calls, and actually Halifax, even though they're 0.2% higher, they are actually willing to, lend what you need. So this is a plan B, and with your permission, that's what I'm going to go ahead with. So it's not all doom and gloom. Yes, we've had a bit of a setback, but we're going to move on straight away and get you to where you need to be. And I think that's the difference, rather than just being like, sorry, can't help you, and it's gone wrong. It's, at the end of the day, us and the estate agent as well, we don't get paid unless the client gets what they want. So it's in our interest to be a really good problem solver. And I think that can come across in your communication skills.
Yeah, I think a lot of that is just come down to being conscientious, doesn't it? And it goes a long way in both roles. Talk to me a little bit about relationships with agents, Tom, and how estate agents specifically can improve their relationship with mortgage advisors to make it more beneficial for both parties.
Yeah, I think I've worked in an estate agency before, and I work closely with estate agents now, and it's down to relationship building. If you can have a better relationship with a client and so almost work together to get to where you want, that always helps. But I think just communication style. So I speak to a lot of clients through like a WhatsApp chat with couples and that sort of thing. And a lot of the agency, they seem to be very quick on WhatsApp to come back to me. So if I just need a memorandum of sale, or can you confirm what was the purchase price again? Was it 361,500? Yeah. So I think just being accessible really helps. And, maybe that's, the way the world is going a little bit more. Maybe there's a bit more sort of self-employed agency out there, rather than ringing up the high street office and you'll speak to, I can't even get through to the guy who sent me over all this stuff. So just being a bit more modern with communication. But again, it's just like what I said earlier, Mark. It's just, if I call you, you might be in a meeting, just coming back in 20 minutes and we'll get it done. So I don't think there's anything radical that needs to change between mortgage advisor and an estate agent. I think, just let's say I'm dealing with a high street estate agent, and they might want that client to use their in-house broker, but they're using me. Just leave that to one side and just, at the end of the day, we've got a client here who wants to move home. We all want to get paid. Let's work together and get to the bottom of it. So yeah, that's what I'd say.
Yeah, I think the communication side of things, what you were talking about there with going back to someone, just replying. You don't need to go back with the answer necessarily. This is the same for a estate agency. It's always a bugbear of mine. Someone's contacted you, they want information. Normally it's after sales sort of information. You can't give them that information instantly if you don't know it. But what you can do is just go back to them and let them know, right, I'm going to find that out. I'm on it, basically. At least then they know that you're working on it. And that's something which I think with, mortgage advisors, solicitors could do with listening to as well, is just going back and saying, right, I'm dealing with that question. I don't have the information, but I will come back to you with the information. That just makes everyone kind of feel a little bit more at ease, I think. So interesting. Yeah, interesting. And we might touch on, because you guys have both moved recently, we might have a conversation about that towards the end. But I want to kind of, for the estate agents listening, sort of dive into the mortgage market. And it feels, I talk to you regularly, Tom, but it feels like it's sort of fairly stable, is like a bit of a weird sort of word to use in the mortgage world, and definitely with the property market recently. But rates kind of little bit drops, little bit ups. What's kind of going on behind the scenes with swap rates and things like that at the moment, Tom? Let's dive into that.
Yeah, you're absolutely right, Ian. It's probably the most stable time that I can remember for quite a few years now. Certainly in the last 6 months, where I send some weekly rate updates to agents who want them, and recently they've been a tad boring. So there's not a lot new to say, because they're kind of, it's the same as what it was 2 weeks ago, which, is a bit of a breath of fresh air, really, because for us, it's actually a little bit less work, because when rates were continuing to go down each month, we were continually updating the product. So that sort of allows us to sort of free up a bit of our time to do other things. But also I just think it's, the rates have come down more than I thought they would this year. So, the lowest 2-year fixed rate out there as of today is 3.84. When it went down to 3.99, it was the first time we had sub 4% rates. There was a big sort of celebration of that. And now there's actually many, many lenders offering sub 4% rates for residential, and for buy to let, there's a lot of sub 3% rates out there. So, and it's not changing. They're not, they're not just then bumping up the next week. They're just kind of there. And it's got very stable. And I think a big part of that is the stress testing for a lot of lenders has changed. What I think is a real positive that's happened recently is with the new stress testing, we're seeing a lot of lenders now. For a long time, they would lend significantly more on a 5-year fixed rate than a 2-year fixed rate. And quite often that 5-year fixed rate was higher. And personally, I never thought that was quite fair to the client, because you effectively, in my opinion, saying, we don't think you can afford 300 grand at 4.2%, but we'll lend you 350 at 4.5. And it's just like, that doesn't quite add up to me. Now, it's not quite as black and white as that, but from a consumer duty point of view, I think that's how it comes across to the average person on the street. So what a lot of lenders have done is, for their 2-year stress testing, they've actually reduced it quite a bit in a number of different ways, and it's allowed us to kind of actually give a bit more advice again. Whereas before, there was times where I was just saying, look, you've got to do a 5-year fix. You've got no other choice. It's the only way we can get you the amount you need. Whereas now I can actually go back to the old days before sort of 2022, actually have a proper conversation and be like, look, for your circumstances, a 2 or 3 or a 5-year fixed rate is best, and that's why I'm recommending that. And yeah, that all comes down to the sort of the stability in the market that we're seeing at the moment, which is, like I said, a breath of fresh air at the moment.
And that stress testing changing, is that a bit of a relaxing of the criteria in general? And is that what is going on in the market to try and make the money a little bit more available for more buyers?
Yeah, definitely. So they see, when it comes to stress testing, they see doing over a 5-year period as a lower risk, because they're not have to refinance for at least 5 years. And over 2 years, how lenders will used to say it is like, well, they're going to have to refinance sooner rather than later, and we can't predict the future. So we need to sort of be a little bit more strict in what we give there, because, I think if you look at someone's life over a period of 5 years, it's probably, yes, there'll be ups and downs in that, but the overall stability will be the same. Whereas, someone loses their job in 18 months, quickly you're panicking in terms of, my fixed rate is about to go through the roof in 2 years' time, which, again, I've got lots of content about how you can get around that, but that's how people don't really realise they can remortgage, if they don't have income at the moment, but that's a different conversation. But there's also little things that I've noticed, like in affordability calculations, Nationwide and Halifax, for example, have brought out some really great income booster schemes for first-time buyers. And a lot of lenders are sort of more taking into account, if you've got, say, like a car loan for £300 a month, it doesn't have quite the same effect as what it did before. Or if you've got like £5,000 on a credit card, very, very normal stuff that I see. They just sent out some communications recently saying, look, it's still a factor, but we understand that the rates overall are lower. Therefore, if someone's got a bit of debt, their chances of defaulting are probably a little bit lower now than what they were 2 years ago. So yeah, there's lots of moving parts to it, but that's the gist of it.
Does it feel, Tom, like the lenders are trying to bring first-time buyers in? Because obviously where we're at the moment from a government incentive perspective, there isn't really any, since the stamp duty has gone back, there isn't really any first-time buyer incentives as such from a government perspective for the first time in quite a while, actually. But does it feel like the lenders are trying to entice them? Like you say, Nationwide, Halifax, always been really good lenders for first-time buyers, almost start the savings very low, don't they, savings accounts, and try and bring the younger generation into their kind of lending. Does it feel like the lenders are trying to support that by the sounds of it?
Yeah, definitely. I mean, they're quite new schemes with Nationwide and Halifax. If you told me there's a lender who will happily do 6 times income, I'd say 2 years ago, I'd have thought something big has changed in the market. But I think they just seem common sense in terms of, how many first-time buyers actually default on their mortgages. I don't know that number, but I suspect it's quite small because probably mum and dad will move heaven and earth to stop someone from getting repossessed, basically. So it's more an income boost thing. So they just are lending, say 5.5 or 6 times income, rather than your normal sort of 4.5, 5. There's a lot of sort of green products out there now, which is, for properties with an EPC rating of normally A or B. So if, young couples buying maybe a new build, there's actually some really good mortgage products out there where the rate might be a little bit lower or there's a really good cashback offering. The lenders are trying. I think there's only so much they can do without government sort of help. Because, for a long time also we had like Help to Buy and all that kind of thing. You're right, Ian, there's nothing really out there at all. So I think lenders are doing what they can within reason and what the FCA will let them, because they're only allowed to have a certain percentage of their mortgage book on these types of mortgages. So depending on how popular they are, they won't be there forever. But whilst they're there, then they're excellent for first time buyers. But it would be great to see some sort of government scheme to help first time buyers again, I think.
And what sort of reaction are you getting from first time buyers? Are you seeing a lot of first time buyers who have been saving for a few years who are now in the market? Because I think when you look at that and you look at the government incentives dropping off, logic would dictate that actually in this period now we wouldn't be seeing a lot of first time buyers, but actually the stats are a little bit different in terms of sales, and we've probably not seen the drop off post stamp duty as we thought we would. But what sort of conversations are you having with clients? Are they saying, we've been saving for a few years and actually that doesn't matter? Is it just a timing thing? Talk us through that a little bit.
Yeah, a mixture really. I'd say I think I sound old saying this, but younger people are sort of living in a generation now where they would rather stay at home longer and not rent and just save up and then get on the ladder straight away. So I see that more. I mean, to be honest with you, first time buyers for a long time was sort of my bread and butter as a business. I used to help, I started mortgage advising in my sort of early to mid 20s. So I just naturally got on well with younger first time buyers, and then they'd all tell their mates because frankly, none of them know what to do. So they'd say, just speak to Tom and he'll sort you out. So I've always had a lot of first time buyer clients just by client referral. But in terms of conversation I have, I do definitely get people who are, been saving up, quite savvy these days, I'd say, in terms of, I think parents are educating their kids more in terms of, there is real value in owning a property. Yeah. If you rent, you are effectively paying someone else's mortgage. But again, going back to the lenders, there's more like Skipton, for example, have got a great product called a track record mortgage, which is what's been crying out in the industry for a long time, actually, is they will now look at people who have been renting for a long time and seeing what they can afford on that rental basis, and then doing a mortgage application off the back of that. It's a very new scheme, and I personally haven't done it yet, so I don't know quite what the underwriting process looks like. But the fact that there's a major building society out there thinking like that is only going to be positive again for first time buyers, especially if you've been renting for a long time, because it's so hard to save up when you're renting.
Rental prices are through the roof as well. So, I mean, I've got no idea what the stress test would look like on a rental for some tenants at the moment, but that's a really good product because I think there is a need for that, especially where we are in the home counties where the average rent might be $1,600 a month now, around here. So if you can pay £600 a month on rent, then you can get yourself a 2-bed flat somewhere, can't you, and make it your own. The question I had as well, Tom, which I appreciate this sits outside of a mortgage advisor's influence, but it's something that you've probably got more knowledge around. Really, since COVID, it's the first time I really realised that the Bank of England base rate sort of has no correlation to the mortgage rates. But as it sits at the moment, it's probably as close to that we've seen since COVID, a match, if you like, at 4.25. Probably 4.25 is probably the average interest rate out there at the moment, or 4.5, close to.
Mhm.
But previous to now, if you like, over the last 5 years, they've been like so different. But they do have a big influence on confidence. But just talk us through from your point of view, when you see a Bank of England base rate hike or drop, what goes through a mortgage advisor's kind of mindset when that happens?
The phone's about to ring from a lot of people. um, yeah, so it has a direct effect on tracker and variable rates, because most trackers track the Bank of England base rate. So if you're on a tracker, that's great. Straight away, next month, your payment's going down. The standard variable rate, which is the rate that you revert to when your fixed rate ends, if you do nothing, that's likely going to come down as well. It doesn't correlate directly to the Bank of England rate, but it kind of does in the background. But it has no impact really, or certainly directly, on fixed rates. If you want to know what's going to happen with fixed rates, you need to be looking at swap rates, because that's kind of the indicator sort of for 2, 3, and 5 year money, and you'll find they're very similar to fixed rates. So we always look out if there's been a big hike or drop in swap rates. That normally means you're going to see a fixed rate change come in about a week or two later. Normally fixed rate changes happen way ahead of a base rate change because of that reason. But a lot of people just assume, and I totally get it, that the base rate's come down by 0.25%. Surely that means that my fixed rate I've got reserves but I haven't completed yet, it's coming down by the same amount, and unfortunately it doesn't quite work that way. But like I said, Ian, there is an overall trend. If that is coming down, then rates should be also coming down overall. It's just not a complete direct correlation. It's certainly not immediate, except for trackers. But yeah, when we see, it was happening a year or so ago, 6 months, a year ago, where it was coming down very frequently, literally any mortgage advisor would tell you your phone will blow up half an hour later, because every application I've got pending, someone saying, does this mean I can get 0.25 cents? It's such a valid question to ask. I would, if I wasn't in the mortgage industry, I would ask the exact same question. So yeah, it's interesting when that happens.
There's a place for estate agents, that are listening, to take that information and use that as well, because if we want to be broadcasters of our local market, and that's what happens, through the eyes of a mortgage advisor, base rate happens, your phone blows up. Well, people are asking questions, they want information. So as estate agents, if you know that, the first thing that I would be doing is getting on the phone, being one of those pests, on the phone to the mortgage advisor, just getting that kind of 3-minute summary of what's going on, and then just bang that out on socials, so that you're the influence, you are that influencer of what's going on in your market. It's a great sort of step that you can take as an agent. Our in-house marketing team have now started sending a quick article out as soon as there is a base rate change, just almost because you kind of know it's coming before it actually happens, don't you? It gets leaked. If anything, you can read it because the banks the week before have already dropped in readiness for it. So you can see it. Do you think we'll get to 4% by the end of the year? I'll come off the fence. I believe we will. I think that's going to happen.
Yeah, obviously, disclaimers and that sort of thing. I'm not predicting the future, but yeah, I think there will be. There's a 6-3 vote last time. That's a pretty significant portion who think it should come down. So yeah, I think personally by the end of the year we'll get there. It's going back quickly to what you said there, Ian, as well. So that's a really good point in terms of, I think if a really good way for mortgage brokers to help estate agents out and build a better relationship is if you've got a good relationship with a broker who can give you that kind of information that you can then pass on as a estate agent to your clients or your potential buyers. That's probably just putting you just a little level ahead of maybe another estate agent who doesn't have that information, and you're telling the client something they didn't know. You're, without sounding patronizing, you're educating them, or you're certainly giving them some really good market updates that if that's just putting you at a higher sort of level than a different agent, it's well worth having a relationship with a broker who can give you those nuggets when you go out.
Also, Mark, I think, which obviously you'll be well aware of with your relationship with mortgage advisors, but mortgage advisors are hand tied a little bit in terms of what they can communicate quickly anyway, without approval, whereas estate agents can kind of, almost take a quote or take the information and pretty much, we're not hand tied. We can, just transfer that information straight out to our socials. So that's why I think the speed of communication for us, we're in a fortunate place really there, Mark, I think.
Yeah, and I think that's part of building a really good relationship with a mortgage advisor. One of the things you've mentioned there, Tom, and I want to dig into what value agents can get out of this episode and how they can get more leads from it and ultimately earn more money in a difficult market. Those, we talked about it last week, those additional income streams are going to be more and more important. So you mentioned about mortgage updates and putting that out to social. You're right, Ian. We can do it without the disclaimers. There's all these call to action things and so on and so forth. Our finance team love the hoops they have to jump through to get approval for anything that they post. But if you've got that relationship, Tom, and you're passing the information onto agents who are then publicising it and generating a lead, talk us through a little bit what a world-class mortgage lead looks like and how you think estate agents could get more lead. Because I think you're right. If you've got the knowledge of the rates and a couple of little snippets, like you said about the track record product being released from Skipton, those little nuggets of information can make the difference between someone saying, "Oh, I've got my own advisor," and actually engaging in a conversation. Which give us a few ideas how you think agents could generate more leads and also more good quality leads, because there's nothing worse than a phone number that never picks up from a mortgage advisor's perspective, is there?
Yeah, I think the easy way to start off that answer is actually to give you an example of what the textbook bad lead was when I used to work in an estate agency, which was where the broker just said, I've spoken to this guy and I told him that you've got exclusive rates and that you'll pick the phone up and effectively offer check them. And I'm like, right, okay. So that's how it used to be a lot of the time for someone who didn't really know how to warm up a client. And, that's down to mortgage advisors to train that person if they're a new neg or something like that. But I'd say
was that from a call centre, Tom, with a blue logo by any chance?
I wouldn't want to comment, but what a really good lead looks to me is when they've clearly actually spoken about me as a person. Tom is local, or he's been doing it for X amount of years. He runs his own business. He's also self-employed. I know this guy personally. Two of my best referrers I've known personally for over 10 years. So we trust each other with our clients. So, and again, just being open with that, saying, I trust Tom with you. He will not mess you around. And if he does, I won't use him again. And just sort of bringing through the personality. He's not going to try and sell you anything. There's absolutely no obligation to use him. It's not allowed to be done, but I still see it happening where you see estate agents saying you must use my mortgage broker. That's just conditional selling, and no one wants to be on the receiving end of that. Just say, look, have a chat with him. You've got nothing to lose. He might be able to find you a better rate. You might not. You might enjoy working with him more. You might enjoy his communication skill better. And then that's down to us as mortgage advisors to, again, it goes back to what I said earlier, having the personality and communication to deal with different types of clients and not have a one size fits all approach. So I think it's more just, the personality side of things, knowing this is a real person going to look after you and I trust him to look after you. And he's got X amount of experience. I think the worst thing you can do is go down the route of he can get you 0.1% better. He's going to chat to you before you put your offer in. It's too late by that point. And also having the conversation as early as possible. Because someone should be speaking to us before they speak to an estate agent, in my opinion. So it's getting, when people are registering or getting your negs well trained to sort of say, look, it's in everyone's interest here to go and use a good broker who knows what they're doing.
And what would your comeback be to that classic client that says, "Oh, I'm just going to go to my bank. I've already been to my bank"?
You're going straight to your bank, and you're literally dealing with one bank's interest rate. You're probably going to have about a 2.5 to 3 hour interrogation. Meeting.
It takes 2 weeks to book in.
which takes at least 2 weeks to book in. And being totally frank, someone who might not, they're probably just getting paid a salary anyway, and they don't really care if your mortgage goes through or not. Again, I'm very biased towards a self-employed model because I've been self-employed for a long time, but I don't get paid unless my client gets what they want. And I'm charging a fee. I need to be able to justify that fee by the service that I provide. So, yeah, I mean, it's just more, even if you went on a comparison site for one, but we are the comparison site, and we can, what comparison site can't do for you is put criteria in. And what comparisons like can't do is give the experience of, okay, you're a sole trader and last year's profit wasn't quite as good as the year before. I know exactly which lenders to pick up the phone to, who's going to, if you go to the high street lender, they might not be the right person for you, and you just wasted a lot of time.
Yeah, in our industry, there's a couple of suppliers, we'll call them, that are the kings of clickbait these days. But HSBC, now they are the kings and queens when it comes to a hook rate clickbait, because I don't think I've ever met a client that said, oh yeah, I saw this rate on HSBC's website, and then they actually got that rate. So it's that bit of information you shared there in terms of qualifying a lead is really good, because if you do go direct, it's really simple, in terms of talking to a client. If you go direct, you've got one lender across the 90 odd that you could look at. And if you go on a comparison site, you're only seeing hook rates without any criteria. So the chances of you getting the rate that you see on the comparison at the top of the table is very unlikely. And if you talk to a mortgage advisor that's got access to be able to review all of them with criteria, then they can kind of steer you away from the ones that are not relevant to you and find the best rate that's out there that's most relevant to you. And what I think is also good is you can also see the rates that you can't get. So if the rate out there is a better rate, but you can't do it because it's exclusive and direct, well, that's up to you what you do with that information. But 9 times out of 10, a good broker is going to say, actually, this is the best rate. You need to go direct and get it. So it's a really nice kind of qualifier way for the newer agents to be able to explain that. The last bit of education, just because we spoke a lot about education, I thought we would do on this episode. Not everyone, and it surprises me the amount of agents that don't understand, just going back to that base rate and swap rates. A lot of people don't understand that. We've used that phrase and then we kind of assumed that everyone gets what that is. But could you just give a brief AI summary of what that actually kind of means for the agents out there that don't know what that is? Because it's the underbelly that sets the rate tone, right?
Yeah, I mean, in the shortest way I can do it, and again, FCA, don't judge me here, but it's kind of a swap rate is almost effectively the rate of interest the bank is borrowing money, and therefore you can then see what their margin is to then go and lend it on to an applicant. And then the base rate is just basically, there can be different reasons for changing it. It could be because they're trying to manage inflation. It could be because they're trying to stop or increase spending. But yeah, I would just say that don't take too much notice of the base rate if you're expecting, because most clients go for a fixed rate these days. So always, you can find it's public information. Just type in swap SONIA rates and you'll see them every day. And it will also tell you how it compares to this time last month and last year as well. So you can see the trends. You can see what 2, 3, 5 year money is, but it's effectively we can't get those rates. The bank gets those rates directly, and then they lend on to the client at maybe 0.1, 0.2, whatever it is, % higher, depending on the lender.
Yeah, it's great. It's great information. I think if anyone's listening now and they want to put a bit of content together off the back of this episode, to just do a really simple explainer blog on swap rates versus the base rate, what it means to you, is a great title. You can probably use AI to help you along the lines with that as well. But I just think that's a really good bit of information that us as agents can share with people, on email, on socials. And yeah, effectively, it's the money that banks lend each other, isn't it? So, it does set the tone, and that's why we've seen it so different over the recent years compared to the base rate, be it that the rates now are kind of quite similar. So no, great information. And it's actually really interesting, Mark, hearing it from. I really like Tom's kind of initial question as well when you asked about world class, because it's so similar, so transferable to a estate agency, but it was Tom said it in a very different way to how estate agents normally look at it. And one of the things, Tom, that I quite like that you said in there is how to communicate with other estate agents, because what I've noticed in the mortgage world is there is no like competition between mortgage advisors. If anything, you refer business to each other. It's not an overly competitive industry with mortgage business to mortgage business, but definitely not on the level like it is for estate agents, would you say?
Definitely not on the level it is. I think it's more feral between estate agents. Whereas I think a big skill of being a mortgage advisor, and I'll tell anyone this who wants to get into it, is there is a big sales element to it, because quite often, unless it's a client who's just being referred to me directly from a client who I've helped, where I know they're not going to even bother speaking to anyone else, and that's obviously the ideal client. That's how I built a business. If it's someone that has been, sent by an estate agent, there is a big chance they'll be speaking to another mortgage advisor as well. So that's when, for me, I sort of think almost like challenge accepted. I need to put my absolute best foot forward here and explain, do the best job I absolutely can, which I would do for anyone. But you almost take a little bit of pride when someone then chooses you over like another mortgage broker. So there is a sales element to it. And again, it comes back to, have you got the personality to communicate to people? Can you make people feel at ease? And the biggest thing I say is, can you explain mortgage jargon in a really sort of simple way? Because I think there's a lot of mortgage advisors and financial advisors who love to sound like they're the smartest person in the room. And I don't care. I'd rather explain to you in a simple way. I don't care if I sound smart or not. If it makes the information that I'm trying to give more understandable. And it's probably the biggest piece of feedback I get from clients is that you made it seem so easy. There's no point in me making this. It's a stressful and hard enough sort of process where you're learning a lot, especially first time buyer. You're learning a lot at once. There's no point of me sort of throwing big words around or acting like this is a more difficult process than it needs to be. That's a skill in itself. So there is definitely a bit of competition between mortgage brokers, but I agree, and it's nothing like the estate agent world.
Yeah, no, totally agree. No, it's good. No, I appreciate you coming on, Tom, and I appreciate you sharing some insights into what's going on in the mortgage industry at the moment. Also, an insight from an outside perspective, for agents to listen to as well is great. And then just that how we can kind of work collectively, I think, with more parties. I think, the better relationships that you build with your tried and tested team around you, broker, surveyor, EPC, removal companies, conveyancing will get there as well. The better relationship you've got with this group of people, property professionals that connect all around the same goal, like you said originally, which is to help a family or a first time buyer move home or buy their first home. We're all trying to get the same goal for our client. So the better we work together, the better we communicate together, the better experience they get. And that's why I knew this would be a really good episode. So thank you, Tom. Appreciate it.
Thank you, guys.
We'll pop some details to the Mortgage Tribe website in the chat as well, in the show notes, I should say. And if anyone wants to reach out to Tom, probably jump on LinkedIn. Tom Ashton, yeah. Mortgage Tribe on LinkedIn is probably your best method of communication, I would say.
Yeah, you find me there. I'm happy to help anyone who wants to reach out.
Yeah, perfect. Thank you, Tom.
Thanks, Tom. A massive thank you once again to Tom Ashton from Mortgage Tribe for joining us today. You mentioned earlier, Ian, about trying to get him off the fence on mortgage rates. We did that. We talked communication, we talked empathy, but I think there was a few little hints that estate agents can take from that to help educate their clients as part of the process of then getting more leads. And it was really interesting what Tom said about a good lead as well. I didn't expect that to be his answer, actually.
Yeah, and a bad lead, which is the classic, isn't it? Is, you get the offer, it's a bit late. At that point, you should really be chatting about it on registration and viewing, but you get the offer and you kind of just go with the cop out of, I'm going to pass you to my mortgage advisor just to check that you're okay for this offer. It's like such nonsense.
Horrible estate agency, that, isn't it?
Yeah, it's really weak, really, really weak. And that they don't want those leads because that's not their job ultimately, is it?
Yeah. So it's a waste of their time.
Yeah.
We very, if someone's got a decision in principle at offer stage, you just sense checking it. We talked about the competitiveness between agents and advisors. Interestingly enough, I think part of that is because estate agents try to steal clients from each other. Mortgage advisors probably don't, because they're going through a process with a mortgage advisor. So I think that happens less. I think that's probably one of the reasons for it. But as agents, we should be asking those questions really early on in the process. That's where you have your most success, particularly with first-time buyers. But it was really interesting that Tom talked about building the person up rather than the rate. And I think we can definitely use rates and Mortgage Watch and all of those little snippets that he gave to open the door to a conversation. But actually, the way that we should be having a conversation is more about the skills, ability, personality of the mortgage advisor to actually sell them as an individual rather than just the rate. Because I suppose, it'd be like shopping on fee. No estate agent wants the lead that wants the lowest fee, do they? Let's be honest.
Yeah. And I think it dovetails well with the episode that we did with Royston, where he was talking about financial services and investment. But just one thing that I think we can learn as well as agents, and this is a different topic, it's probably for another episode, but it's relevant because I was reading an article about starting a business in 2025 and the best way to it, the best way not to do it. And this guy over from America was effectively talking about starting a business without using finance, but using client funding, he called it, to start your business. And what brokers, I think the good brokers out there have now done and established is they do charge up front at the point of application, be it 200 quid, 300 quid, 500 quid in London, £1,000. If you're dealing with an investor, it's common to charge £2,000 as a application fee, they call it. Effectively, it's an admin fee, right? To do the work with a view that you might not guarantee payment. But I think mortgage advisors have done quite a good job at actually going, look, we're going to probably get £1,000, maybe 1,200 quid from the lender here, but we're also going to charge 500 quid for the work because we're going to do a lot of work and it's not a guarantee that we get paid at the end. I think that's something for estate agents to think about. And client funding, from this guy's perspective, was ultimately to get paid up front, by the client before you do the work. And our surveying business that we started, that was the first thing that we said, is we want to get paid up front before we do the job, before we do the survey. So client funding it, and I think that's something that estate agents, we don't need to necessarily get the whole fee up front, but Purple Bricks showed us that a client will pay up front 9 years ago, and we still haven't really done much with it, have we, as estate agents, to kind of go, well, that concept is there. The higher end stuff they do, they do charge up front for marketing costs.
Yeah, we charge up front. We charge up front
for your bigger stuff, don't you?
Yeah, we charge up front for our bigger stuff. It doesn't cover the costs of the marketing. It covers about 50% of the cost of the marketing. And funnily enough, we're having a conversation at the core part of our business, the majority of our business, under 750 grand. We've charged. We've tried charging. We're now talking about whether we should still try charging. Not a lot, like 150 quid. But we should, I do think we should be. And it's very difficult when the market's quite challenging. It's certainly not as straightforward as it was, 5 years ago, 3 years ago, whatever it might be. When the market becomes a bit more challenging, you start to question these decisions. Should we charge? Are we losing instructions from charging? But I do think when we're going in to see a client and we're putting a lot into getting them on the market, that we should be paid up front. And if a client doesn't want to pay, it begs the question, are they the right client for you?
Yeah.
Are they just testing the market? If a client says to me, oh, we just want to test the market now, I am out of there as soon as possible, because that is a waste of time in this market. You need motivated sellers who, I think should be willing to pay up front. But the challenge is when your competition doesn't do it, then it makes it a more difficult conversation. But just to bring it back to the mortgage advisors, yeah, it makes sense when they're doing a lot of work, and they could, as we can, not get paid through no fault of our own. So So yeah, it's really interesting to hear about the mortgage advisors paying, charging the upfront fees, and then still, getting the proc fee from the mortgage lenders. But I think within what Tom said, one of the things that I took away from it, as I mentioned, was that building up them as a person, building up them as a personality, knowing a little bit more about what rates are out there to open the conversation probably a little bit more. And probably as well, talking a bit more about swap rates with clients and educating them, and then using this podcast as a bit of an education piece.
Yeah, I think it's just having that pitter patter down, for you as an estate agent, because ultimately, I know we're passing the mortgage advisor over because we might want a little bit of a kickback, but actually when we're putting a sale together, we want our buyer and seller to be dealing with the best mortgage advisor they can be, the best solicitor they can be. Yeah. Hopefully us as the best estate agent they can be. We want those good people in play because it makes it more likely that that transaction will go through, and it improves the communication channel for us as well as the client. So for me, if I'm referring a mortgage advisor, it's not because I'm going to get a couple £100 out of it. It's because I legitimately want that client with them. Like when Tom's talking about, just letting people know, I'll come back to you with that answer. Or if they want to talk on WhatsApp, he talks on WhatsApp. If they want to talk email, if they want a phone call, in 2025, some people still do phone calls. So, he'll pick up the phone and he'll call you back. I think that's really important.
It's about building our professional partners. And yes, the kickback, can help the profitability of the business and build a more resilient business. So absolutely that's part of it. But when you see companies taking a grand for conveyancing and what have you, it's the exact opposite of this, because actually building our professional partners who will pay reasonable but not extortionate referral fees will help us get more transactions through, and therefore help more clients move, help our business. You're not going to give this to a mortgage advisor who you don't know, who's willing to pay 50% of his fee just for the money, because actually you'll never get paid on it. There's no point. And not only will you not get paid on the mortgage, you're not going to get paid on the sale that the purchaser doesn't complete because the mortgage advisor's too busy to do the work, for example. So you're absolutely right. This is about building a network of professional partners that we can advise to help clients more. And that's, that's ultimately just what it all comes back to. And hopefully there's a few little nuggets in there that can help agents help more clients.
Yeah, absolutely. Get a good relationship with a broker, one that you trust, and then work with each other collectively for the same client, and share the knowledge as well, because the broker wants a little bit of knowledge from us. What is going on with the market? Is this the right price? Is this going to go through? Is this going to get through the mortgage valuation? And on the other end, we want a little bit of information. What is going on in the background with rates? What are you expecting to happen here, there, and everywhere? What's going on with stress testing? What are the new products like that Skipton one that he was talking about that might appeal to tenants? This sort of information is great for us as we look for content value to share as estate agents, and to become, a news channel or broadcaster locally for homeowners to kind of listen to. It becomes really good, valuable information. So, no, enjoyed the episode. Appreciate Tom coming on. Details are obviously in the show notes, and I thought it was super relevant based on the episode that we did the week before as well. So yeah, really good. If you haven't listened to the one before, go back and listen to that one. You can see it.
Anyone would think we were organised with these two back to back, wouldn't they? It's almost dangerous. So yeah, really, really good, insightful episode. Took me back to those days of financial advice. As you know, we do this show because we love our industry. We want to see it improve and get better. If you have enjoyed today's episode, please share it out on social. Feel free to reach out. I'm Mark Worrell. He's Ian Macbeth. Thank you very much for listening. Thank you very much to Iceberg Digital for sponsoring today's episode, and we'll see you again next week.